The core PCE price index is the Federal Reserve's preferred measure of inflation. Gold is closing the week near the $2,800 per ounce. Any of these points, there is a high probability that we can see a reaction from the price. Welcome to this week's market analysis. I'm Isa Martinez, a professional trader and analyst for xChief. Today we'll dive into the latest movements in the financial markets, taking a closer look at the dollar index, the SP 500, Euro USD, and obviously Bitcoin. With the recent developments surrounding President Donald Trump's crypto policies, heightened volatility, and shifting global trends, there's a lot to unpack. Whether you are new to trading or a seasoned investor, stick around as we break down the charts and key market fundamentals to help you stay ahead of the game. We will start, as always, with the economic calendar. Don't forget that these hours that you're going to see are based on the New York trading session, GMT-5. The upcoming week is packed with significant economic events that could greatly impact the markets. On Tuesday, January 28th at 9 a.m., the Civic Consumer Confidence Report will be released. This measures how optimistic or pessimistic consumers feel about their financial situation, which can influence spending behavior and overall economic activity. A higher confidence level usually points to economic growth. Later on Wednesday, January 29th at 1 p.m., the federal funds rate will be announced, followed by the FOMC statement and press conference at 1:30 p.m. These events are critical as they provide insights into the Federal Reserve's monetary policy decisions. Markets pay close attention to any clues about future rate hikes or cuts, as these directly impact borrowing costs and market sentiment. On Thursday, January 30th at 7:15 a.m., the European Central Bank will release its main refinancing rate and monetary policy statement. These provide a snapshot of the European Central Bank's stance on interest rates and economic conditions in the Eurozone. At 7:30 a.m., the advanced GDP, which is the quarter-on-quarter for the United States, will be published. This is a key indicator of economic growth. Unemployment claims will also be released at the same time, offering a weekly update on the health of the US labor market. Then, at 7:45 a.m., the ECB press conference will take place, where further details on the ECB's policy and economic outlook will be shared. On Friday, January 31st, the German preliminary CPI will be released, which is an early look at inflation trends in Germany and can influence the euro. In the US, at 7:30 a.m., the core PCE, the price index and employment cost index, will be published. The core PCE price index is the Federal Reserve's preferred measure of inflation, while the employment costs index tracks changes in labor costs, both crucial for gauging inflationary pressures. This week promises high market volatility as traders digest key data and central bank decisions. Stay tuned as we analyze these events and their potential impact on the markets. And now let's head into the most important news of the week. Gold is closing the week near the $2,800 per ounce, approaching all-time highs as market attention shifts to President Donald Trump's pro-growth policies and the Federal Reserve's upcoming monetary policy meeting. Trump's recent call for global central banks to lower interest rates has fueled bullish sentiment for gold, positioning it as a safe haven asset amid ongoing economic and policy uncertainty. The US dollar has weakened significantly, with the dollar index falling to a 5-week low of 107.46, supporting gold's upward momentum. Analysts see potential for further gold gains, with $2,800 acting as a key psychological level, as market participants weigh inflation risk tied to Trump's proposed tax cuts, tariffs, and interest rate reductions. The Federal Reserve is expected to keep rates unchanged next week, but President Trump's push for lowered rates has created a conflict with the Fed's cautious stance under Chair Jerome Powell. While gold benefits from this tension, analysts warn of continued volatility, especially with the European Central Bank and the Bank of Canada also set to announce rate decisions next week. Ole Hansen from Saxo Bank predicts $2,800 is just the start for gold, driven by safe haven demand and momentum buying. Meanwhile, inflation concerns concerns remain central, with traders eyeing potential price pressures from Trump's policies. Analysts highlight that gold's outlook will hinge on the Fed's decision and its response to persistent inflation fears. On other news, Bitcoin ended the week with modest gains, rising 2.5% to $105,200. And in the moment we are recording this analysis, it reached more than $107,000. But now it is having a pullback. However, Bitcoin remained below its all-time high of $109,000 reached earlier this week. The crypto market showed mixed reactions to Donald Trump's recent initiatives, including his push for friendlier crypto regulations and an executive order to create a working group focused on digital assets. However, the lack of clear details on the establishment of a national crypto reserve left markets uncertain. Among the highlights, Trump banned the creation of central bank digital currencies in the US and ensured banking services for crypto firms. Any plan requiring congressional approval may face opposition. Meanwhile, Bitcoin whales have ramped up purchases, with holdings rising by 2% since January 17th, according to CryptoQuant data. This renewed institutional interest follows expectations of frog crypto policies under Trump's administration. Major buyers like MicroStrategy and KULR Technology have reduced selling pressure, potentially establishing a price floor. In the altcoin market, Ether gained 5%, XRP rose 2.7%, while Solana, Cardano, and Polygon saw increases between 2% and 8%. Dogecoin also posted gains of over 3%. On the other hand, the Trump meme coin fell another 3%, trading at 33.88 points, continuing its downward trend after a highly volatile launch. Although it peaked near $80 with a market cap exceeding $14 billion, high volatility and ethical concerns surrounding Trump's influence on the market have weighed heavily on the token. And now we will continue with the technical analysis. As always, we start with the DXY, the dollar currency index. For now, the first thing we need to see is that the structure we had before, now it's changing. And which structure we had before? We had a clear upward structure, a clear upward trend. And if I try to draw it for you, it would be something like this. We can see higher highs and higher lows, and that means that the price was in an upward trend. Now we need to know a couple of things. The first thing we need to understand is a market structure shift, and that's because if we highlight this low that we can see right here, this low, you can see that this was the low that made the movement from the point of the 107.750 to 110.176. This movement was the responsible for making a new higher high in the 4 hours interval with the DXY. Considering this information, we can say that this low is the strong point, the strong low on this interval. With the price break this low, it is highly possible to have a market structure shift. The next movement I can be expecting for the US dollar index will be to have an upward movement, but maybe not to continue the upward trend. For this time, we will see an upward movement to continue the development of this market structure shift. However, I will leave you with the objectives that are considering the liquidity that was made by this last downward movement. My first bullish objective will be here at 108.510. The next one, and I think this is really important because we have here a clear vacuum block. The best point of this vacuum block is located here, 109.052. And finally, for this week, one of the most important targets would be this one located here at 109.423. If any of these three targets can be reached, don't forget to try to see a manipulation. That means that the price can come, manipulate, just touch this point, maybe could be this, for example, and then the price can continue making this downward trend. And if this happens, this is the confirmation we needed to say that we are seeing a market structure shift. And after this, it is highly possible that the DXY can continue its downward trend. which kind of movement? This kind of movement. Doing lower lows and also doing lower highs. Put enough attention if you are trying to trade with the DXY. Finally, targets for the British traders obviously will be this point of the DXY, which is located at 107.218. Next point, important also, is located at 106.698. And finally, maybe one of the most difficult ones, but I should show it to you. It is located here at 105.420. With this information, if you are bullish or if you are bearish, you can consider all the scenarios so you can be ready for this week. Now let's change a little bit of markets. Let's continue to the SP 500. Very interesting the move we have saw the last week, and this was because we reached an all-time high. And as you can see, one of the targets I put you last week, it was also a resistance for this movement located here at $6,105. After this upward movement, we can see that the price was developing a pullback and then the market closed. So for this week, maybe because we now reach a new all-time high, and remember that this has a lot of relation with the things that Trump is doing right now, we can consider maybe that the price, yes, it can continue an upward movement, but remember that we need a pullback to have an organic movement. So point of interest for the SP 500 this next week should be all these vacuum blocks that I can see here, and I will be showing to you. So the first vacuum block, and I will put only the 50% of it to make it a specific price, is located at $6,063. The next one is located here at $5,966, and the last one that I'm seeing here, target for the bearish traders, should be $5,881. Any of these points, there is a high probability that we can see a reaction from the price, and that means that after the pullback, if everything goes well as we are projecting, the price can touch any of these points and have a reaction, touch the point and reaction, and touch this last point and make a reaction. So this could be good prices to take into consideration if we are trading this next week. And finally, just to consider more bullish targets, next important target will be located here at $6,189 for the SP 500. Now let's go with the Euro USD, and as you can see, this is the opposite movement that we are seeing, for example, with the DXY. So for the Euro USD, we are seeing also a market structure shift, but from a downward trend to an upward trend, and that changes a lot all the objectives we have the last week. So which were the important point of the Euro USD? The first one was 1.04345 and the other one was 1.04584. Both of these important points were broken. So after this, I can expect that yes, maybe the price of the Euro USD to try to fill any of these fair value gaps. I will leave you 2 points here. The first one is located at 1.04353. Maybe it can also have a manipulation at this point, the price located at 1.03723. That means that after a proper pullback to any of these points of the Euro USD, it is highly probable to see a reaction for the Euro USD to confirm this market structure shift from a downward trend to an upward trend. Now, my bullish targets for the Euro USD should be this one is the first. I see several wicks here, so I will be considering only bodies of the candles. So my first objective, as you can see, it was actually an objective that we have reached. I will maintain this objective for the next week, located at 1.05215, and also a next good objective for the next week should be here at 1.06043. So if you're considering to make new trades the next week, specifically if you are doing bullish trades, I think these are good targets. And finally, let's see Bitcoin. For now, Bitcoin doesn't have a clear direction, and that's because there are no higher highs, higher lows. the lows and the highs are not clear. They are not following a trend. But considering all the fundamentals we saw this last week, we should pay more attention to bullish movements. So I will leave you only two targets for this week. The first one located at $107,000 with $51, and the last one will be obviously the all-time high at $109,358. After that, targets we have at $110,000 and also $120,000. That's all for today's analysis. If you found this video helpful, don't forget to give it a thumbs up, subscribe to the channel, and turn on the notification bell so you never miss an update. And if you are ready to take your trading to a next level, head over to www.xChief.com and sign up to join our trading platform. Thank you for watching, and I'll see you in the next video.